And a happy Tuesday to everybody, and welcome to the
Yay.
Investor Guys podcast. Mr. Barnett, how are you doing today?
I am doing good, sir. My brother, good to see you as always.
Thank
And
you. So
and
far, we have
having,
managed not to wear the same jacket, because I have got that
yeah.
jacket, and every once in a while I wear it, and every once in a while you wear it. We so far managed not to wear it at the same time. Seems like it's a uniform.
It's funny today when I was putting it on. I actually, this is the 4-button version, and I have this exact suit in a 3-button version, and it just came up. The guy called me and he's like, "Hey, you want to get that suit in 3-button?" And I was like, "Sure." And when he delivered it, it looks like it may be off of the same bolt. It is exactly the same. I can intermingle pants and you can't tell. And so it's like, man, I should have told him to get it in double-breasted instead of, but so today is 4-button day. So it looks like the suit I have worn before, but it is different.
And as much as I love double-breasted, and I still do every once in a while, they say it's out. They say that the double-breasted look is not in, but I love those double-breasted suits.
Yeah. It's never out for me because I just am going to wear it because I like them. So I'm like, I don't really, at my age, I'm past 30, so I really don't give a crap about what's in style and what's not. So
I made a command decision when I was packing things up, moving from California, and figure out what was gonna come here and what was gonna go to donation. I donated my double-breasted suits, figuring if they ever came back, I could always go back and get some more.
There you go. There you go.
So speaking of double-breasted suits, let's talk about Wall Street.
You got it.
How Wall Street is snatching up real estate left and right.
Yep.
And you know what? I mean, it's not even just Wall Street. Honestly, if we get a little closer to the real estate world and what we might or might not have expected, Zillow is now in the business of buying houses. Zillow is buying up properties and turning around and either reselling them or putting tenants into them. And let's start there and work into, Blackstone and Wall Street and everything else. You and I, we know why this is. Okay. We are always talking about how real estate is tangible and you can walk out and you can feel real estate in this. More than that, real estate doesn't fluctuate the same. Real estate isn't based on the same types of things as stocks and bonds and things that Wall Street is typically known for. Now, the stock market, without a doubt, has been up. It's been strong. So there's this whole cause and effect type of thing. Are they buying real estate because the money has been so good because of the market, or are they buying real estate because they're finally realizing what a good investment real estate is, or is it a mixture of the both? What do you think?
Well, I think it's certainly a combination of both, but I think it's more so the fact that they've finally started to realize, and I think they also know where we're headed, and that we're going to get into massive inflation. We're getting a tiny taste of it, but what the Biden, that's how I refer to it.
You're not the only person who does that. So.
Yeah, as the Biden administration is going to show us, Jimmy Carter was an amateur at wrecking the economy, the worst president we've had in history for an economy, because we had inflation, we had hyperinflation, and things just went absolutely insane. The Biden administration is going to show Jimmy that he just was an amateur. Now, what they're doing right now and what they're going to continue to do is going to have a massive impact. So here's you and I as real estate investors and everybody that's listening to this. This is why you look at a lot of different factors as to why I want to be in real estate. Here is one that you may not have thought about for quite some time. And we always talk about inflation, but this is what I personally refer to as political inflation. It's stupidity, and that stupidity hits the market. And one of the ways that it hits the market is in inflation. So one of the ways that you and I have to combat that is by owning real estate. And I think a lot of what's been going on with Wall Street and is continuing to, and they're ramping up big time, is they see this coming. way clearer than the average investor does, and goes, you know what, we need to be here, because the last few times that we've had an inflationary spike, they weren't in single family. They, they've always had REITs and some commercial stuff, but they weren't in single family. And now they're going, hey, you know what? There's going to be a massive amount of inflation, and we're going to be able to knock it out of the park owning single family houses. And the building environment is very, very slow. And that's one of the reasons we've had this massive amount of continued uptick in pricing, is that builders just, and I'm not talking about just in the last few months when we had the lumber scare and all that kind of craziness. I'm not talking about that. I'm just talking about overall for the last few years, builders just haven't been out there creating the new properties like they have been for 60, 70, 80 years. And so that has helped push this pricing continually up.
And let's talk about those hindrances for builders, because I know what that is, because I am one of those myself. But before we go into the break, let's talk about the trend that has changed. So right after 2007, 2008, or even as we were getting into 2007, 2008, we saw a trend towards smaller homes. We saw people downsizing, even though they had families and everything else, downsizing into smaller homes. In fact, there were news stories at the time about how the average size of a home started off small, grew into the mid 2000s, and started to go down again. Now the trend is towards bigger homes again. And a lot of the impetus for that is because so many people are now working from home because of coronavirus. They are at home all day long, and they're realizing how small it is. Those walls are caving in on them, and they are looking for bigger homes. That's causing people to move literally within their own markets. And then we're seeing what happened with this coronavirus and with everything else, with blue states versus red states. A lot of people are moving out of their markets and into other markets. So we have this huge movement going on all across the United States, both internally and as far as individual markets going in, and externally as far as people moving out of different markets. And one of those driving factors is the size of the home that people are in. They're looking for bigger homes. Since they're going to be spending more time in their homes, they want bigger homes, they want nicer homes.
Sure.
Then as we see, like I said, the political climate changing, we see people moving from certain states to other states. Florida and Texas are two of the big ones, and those are two of the ones that Wall Street has been focusing very hard on purchasing properties in both of those markets. Let's take a break, and we will get into why builders have not been building that much for the last decade. Back in a minute. 11 months out of the year, Bill and I host real estate buyers events in cities like Cleveland, Ohio, where we ourselves invest and see great returns. We show investors the types of strategies we're using, the types of properties we're using. We introduce them to people here on the ground and the resources that they can use to get started right away. Day 4 of this event, we're actually touring properties and making offers on properties. This event was designed to put properties in your portfolio right away, high-performing properties. Read more about the Real Estate Buyers event. Get registered. We'll see you at the next event, realestatebuyersevent.com. All right, and we are back with the Investor Guys podcast. And just before we left, we were talking about what's driving different trends in real estate and what's causing Wall Street to say, hey, you know what? We need to start putting money into purchasing single family homes. And we're going to talk about what they're doing with these single family homes, because they aren't purchasing them and flipping. They're purchasing them and holding them. So that is going to be something that's going to be a long-term effect on our market. Mm-hmm. If they were buying and flipping, that's just a little blip. Okay. But they are buying and they are holding. But let's address one of the reasons why there is a housing shortage. And I say housing shortage, I say that kind of tongue in cheek, because it's not really a housing shortage. It's with all the transitions and everything else. I don't think the dust has settled enough for people to realize the actual amount of housing that is available, the inventory that's out there. But builders have not been building as much in the last decade, as Bill mentioned, and that is because regulations have cranked up to unbelievable degrees, especially in, and I don't mean to be political, but especially in blue states. Now, I moved from California, and in California, I have a construction company, and we did a lot of new construction. Average cost for permits nationwide is $90,000 for all the permits you need to build a house from the ground up. You're looking at 90,000 plus as an average across the country. Now in California, many times we're looking at 150 plus for permits to start building something, getting it up from the dirt. In California, as in other states, we had additional requirements that we had to meet. The house had to be a certain percentage of green, and had to use a certain percentage of recyclable and renewable materials. There were just all kinds of different hoops to have to jump through. All of those things are expensive. All of those things are costly. In the Los Angeles area, the greater Los Angeles area, and Orange County, and the counties to the north and to the east of Los Angeles, in order to build a property that's going to give you any type of return on your investment, you're really looking at, unless you're looking at like private homes on the beach, which is what we used to build in Orange County, you're looking at high-end condos. That's the only way that you're going to be able to get your investment back and make a profit, is by building high-end condos in those markets. That's why we're not seeing a lot of smaller single-family homes. That's why we're not seeing apartment buildings. We're not seeing those types of things. In Los Angeles, well, in California in general, they now have rent control. So after 15 years, regardless of your situation, you're not able to raise your rent more than what the state will allow you to do each and every year. So there's no motivation for investors to purchase those types of properties that are going to be rent controlled, which means there's no motivation for builders to build them, because there's not going to be the demand to buy them. So we're looking at situations like that have slowed down new construction across the board, across the country. And until things change, until regulations change, the housing market isn't going to change as far as builders are concerned. We make more money fixing houses or adding on to houses than we do doing new construction from the ground up.
And we also see that the regulation environment has seeped down into the rehab world, into the flipping world, a market you and I are both in, Cleveland. They have now the lead-free Cleveland initiative, it's being challenged in the Supreme Court of Ohio, but until it's overturned, they're out there doing it, Cuyahoga County, and what they're doing is they're saying that you have to go in and remediate lead-based paint. Well, lead-based paint was outlawed in '78, and if it's built before '78, it has lead-based paint, period. And all lead-based paint is a disclosure. And that whole thing came about because of some children in Chicago that were being parented so well that their parents were allowing them, through their close watching of them growing up, to peel paint off and eat it. And a couple of them got sick. And so this whole thing started because of that. And now, you have this remediation going on. And if you look at lead-based paint, so just think back just to '78. So from '78 to 18, you're looking at, there's 40 years there. And then we got another few years. So we're about 44, 45 years of time for, these are houses that were built in '60s and '70s that,
earlier than that, some of these houses.
Hold on, stop, wait. I'm getting there. So you think about that, think about those houses. They have been repainted multiple times in those almost 45 years. Now you go back and you look at the things that a lot of the stuff that you and I buy are anywhere from on the old side, if you will, 1900 up into the 30s and 40s, and 30s and 40s are just out, just everywhere. And now you start thinking about that. So let's think about 1930. So now you're looking at 80 years of a house, how many times has that house been repainted? But certainly it's been repainted, just like the construction that was built in the early 70s or mid 70s. It's been repainted multiple times since 78. Yet here is another liberal movement of, oh my gosh, we have to do something about this, because it's a way to squeeze another few $100s out of every single property owner that is either selling or renting. And they're just squeezing. It's a few $100s. So I'm really hoping, I have very little realistic expectation that the Ohio Supreme Court will strike it down. But I'm hoping that it will.
I would put more faith in the Ohio Supreme Court, to be honest.
Good.
They've done some pretty significant things. And one real quick, while we're on Ohio, I don't know if you knew this, but Ohio challenged the Biden administration when Biden gave the states money for the COVID relief. They stated that the states could not reduce the taxes as a result of the money that was given to them. Ohio said, no, screw that. We're reducing the taxes and we'll challenge that in court. They challenged it in the Supreme Court. The Supreme Court upheld it. So the people who live in Ohio, thanks to Biden, are going to be paying less taxes because they're using the COVID relief funds in Ohio to reduce taxes, because Ohio was one of those states that was managed well enough as far as their fiscal budget that COVID didn't affect them. I mean, it affected everybody, but it didn't affect them the way that many other states such as New York and California and Illinois were affected. So that money that they received was a boon to them. So instead of spending it on silly, worthless, dumb things, they put it back into the pockets of fellow Ohioans. So like I said, I would give them more credit than what you.
Good.
Now we're up on a break, but let's cover some specifics that are going on with Wall Street as far as them buying up our real estate. Talk to you in a minute. Once a month, with the exception of December, Bill and I go to markets where we have experience and we host a real estate buyers event. These are markets that have great return potential for your real estate portfolio. We're going to show you the properties that we buy. We're going to show you where to buy, where not to buy, the strategies to use to make great income from these properties. We're also going to show you resources and individuals here on the ground that you can use to start building your team so that you can repeat this process over and over. The real estate buyers events are designed to put high-performing properties in your portfolio right away. If you're interested in hearing more about the Real Estate Buyers Event, realestatebuyersevent.com. That's realestatebuyersevent.com. Read more about the events, check out the schedule, and register. We'll see you there. All right. We are back with our final segment on talking about how Wall Street is buying up real estate. And if we have time, maybe we can talk about how that's going to affect us as real estate investors also. So I may have mentioned this at the beginning. Blackstone is putting in $6 billion on their fund alone. We've got multiple other Wall Street firms that jointly are putting in over $60 billion, purchasing primarily single family homes. And that's not counting companies like Zillow and other companies that are changing their operating standards, I guess you'd call it, their operating methods. Zillow was making money advertising or selling advertising to individuals like Bill and I, who were real estate professionals also. And they decided that model wasn't working for them. They were just going to go ahead and start working by purchasing real estate, because Zillow is also an agent. They also are able to purchase properties. They take that discount that they would get in purchasing the properties. In fact, a lot of times they negotiate an even greater commission on those purchases and those sales. I spoke to somebody who just purchased a home from Zillow, and they had to pay 6.5% commission versus just the 6%. And typically the seller is the one that pays that. So Zillow is selling the home to the buyer, and the buyer's having to pay a 6.5% commission on top of that, when it should typically be Zillow that's paying it. And I guarantee that Zillow took that 6.5% out of their own side when they purchased the property and put it in their pocket.
You
So
bet.
you're dealing with people who are not necessarily, to me, that's unscrupulous. I'm not going to judge Zillow. I'm not going to say use Zillow, don't use Zillow. To me, when you start double dipping like that, I don't think that's ethical. I don't think that's.
Yeah. Well, and most all states, and I'm going to say this loosely because I can't attest to all states. I can certainly attest to Texas. Can you have dual agency? Technically, the answer is yes. And what dual agency is when you represent both sides of the transaction. Well, we all know that there's no way to do that without one of those sides not getting proper attention. There's no way for any real estate agent, no way for any attorney, no way. And that's how I compare it. You wouldn't hire an attorney that was also representing the other side, because there's no way that one of you is not getting hammered in this deal. Well, it's no different as a real estate agent. You can't represent both sides. And although it is legal, like I do not allow our agents at DFW Properties to do that. It's just like, hey, they're like, well, there's nothing wrong with it. There's not an actual law against it. I'm like, no, there's not. There's Bill's law against it. And so if you want to do that, if we get something, then we'll take, as a firm, we'll handle the dual agency, but we'll have a separate agent representing one side, and the other agent can handle the other. And they may both be at our firm, but I'm not going to allow one agent to handle both sides of the transaction, because there's too much opportunity for somebody to be dissatisfied.
So let's talk about how this is going to affect the market, because we have Wall Street firms literally buying up entire neighborhoods, because that allows them to control the value of the rents in that particular neighborhood. So as real estate investors, what is our challenge? What are our benefits when we are dealing with a situation like this?
The challenge is going to be that prices continue to go up, and they're going to artificially, to some degree, go up because of the fact that you have this influx of cash coming in, absorbing market. So that pushes pricing up because it creates more demand on a decreasing inventory. So prices naturally go up. Just supply and demand is all that is. It will come back, and as inflation starts to calm in the years to come, if we don't go fully socialist, if we go full socialist, inflation's not going to matter. It's going to be insane from now on. Look at any socialist country out there. We will not be any different if we continue down this path that we're on. If we get our head out of our rectum, then we will be able to stop this. And as we do, inflation will start to calm. It's not going to calm anytime soon, but if we get past this over the next 3-4 years, we could start to rein it back in from where it's going and it's going to go. And when that happens, we may see the same Wall Street firms starting to sell some of that back out into the marketplace, because they have to keep a relationship with their shareholders, because they're not buying these with corporate money, they're buying these with public money. So these are being bought in firms and hedge funds, and as they do that, mutual funds and hedge funds and all kind of vulture funds, those kind of things, as they do that, when the market starts to soften, they will be required by the demand of their shareholders to sell some of that stuff so that dividends can continue to come out. And you always have to have a certain amount of liquidity in case you have shareholders that want to bail out and the market's not really liquid enough. So we'll see. But I think the short term, it's going to be, we're just going to see prices continue to go up because of this.
I think we're going to see prices come up, just as Bill has said. And that's going to be a challenge as far as us having to be able to purchase these properties. And again, always go on the numbers. Okay. If the numbers work, do it. It's a good deal. If the numbers don't work, walk away from it, look for something else. Remember something that Bill and I have said over and over and over again: rents go up, they rarely ever go down. So
Right.
we have large firms that are in a position to purchase considerably more real estate than we are as individuals, that are going to be driving the market, intentionally driving the market up as far as values of the homes, because eventually they want to be able to either pull money out of these properties or to sell them for more money than they purchased them for. But they also want to drive up the value of the property because it drives up the rent value for the property. When they are doing that, they are driving up the values of our own properties. So if we are in these same markets that they are, if we're in these same neighborhoods, they are driving up the values of our properties. They're driving up the values of our rents. And again, remember, rents don't typically go down. So if we're in one of these markets that's seeing this type of a drive, and I am in one of those markets in South Florida, literally we have seen rents go up $300 to $500 a year in just 1 year. And I'm talking about rents that start, people who used to pay $900 and $1,200 are now paying $1,700 a month for the exact same unit. That's almost double. It's absolutely insane. And it is because so many people are moving into the market, and because we have Blackstone, we have lots of companies here purchasing, just, I call them industrial buyers, because they are buying wholesale. They're buying, and I say wholesale, I don't mean they're buying at a reduced rate. They're buying literally everything they can get their hands on.
Yep.
And because it's cash and because they have a strategy, they're paying market value. They're bidding over, they're driving the value of the properties up. We've seen properties go up in this market, $300,000, $400,000, $500,000 in just a year. We're seeing similar types of things happen in Dallas, not quite those same numbers because Texas has way more property, way more space to build properties. So the demand isn't quite the same. Here we're limited. We can't really go anywhere. We can't go into the ocean. We can't go to the swamps. It's already built south and it's already built north. If we're buying properties in these markets, our values are going to go up as well.
Yep.
And we need to keep that in mind, especially when we're doing the numbers. Our rents are going to go up, which means our profits are going to go up. These are things that we need to look at as far as long-term, how these things are going to change in the next 2 years, 3 years, 4 years when we're calculating our numbers. Anything you want to add before we get out of here, Mr. Barnett?
Yes, if you're in a state that has not started the insanity of rent control, and you hear that starting to be whispered in political circles in your state, do everything you can to prevent that from happening, because that's just one more piece of communism and socialism. It's an easy way for it to start, and it's a mess. Rent control does not benefit anybody, except the elite, which is what most things in the socialist world benefit, are the elite.
And you'll see sometimes it'll happen just in cities, and then it will grow out into states. So in California, it used to be cities. Cities were rent controlled. Same thing with New York City. Different parts of the city are rent controlled. Now the entire state of California is rent controlled. So yeah, keep an eye on that. And remember that it does not benefit you as an investor for sure. And ultimately, it doesn't benefit tenants either, because it limits what they're able to actually get into also. Yep. Good show today, Bill. Thank you. And we encourage all of you to follow us wherever you happen to be listening to us. Share us if you want to watch us in person on our video. Join us at investorguyspodcast.com. All of our podcasts are there. We will see you back here on Thursday. Happy investing.
See you now.